trading is all about rules, discipline, and risk management. And of course, having an edge over the market, which is your tested strategy. And if you combine all that, then you will fall in the category of the profitable trade. Now, profitable trading doesn't consist of 8 out of 10 wins. It consists of a better reward to risk ratio, a good risk management. And let me tell you a very interesting fact of the profitable traders. Do you know the profitable traders in the world, their winning ratio is 40 to 45%, and still they are profitable trader. Why is that? Because the 45% of the trades they won have a better reward to risk ratio than the other losing trades. So that is what you need to master if you want to make trading your full-time career. And it is absolutely possible to make your trading full-time career if you follow your rules and if you are disciplined enough. And why not falling in the category of the 5% trader? It is absolutely possible if you make it possible. It's totally up to you. It's totally up to your hard work. It's totally up to your motivation. So have that passion of learning and have that passion to achieve your goals. Now in today's video, as always, over the weekend, I want to give you something valuable to learn so that it will help you to take better trading decision, so that you can learn something out of my videos and implement that in your strategies so that you can trade more efficiently rather than just guess in the market and use it as gambling, which is not good. Now, in today's video, I'm going to show you one of my favorite pair which I use for scalping, which is GBP USD. I have few other pairs, few other tested pairs, but I want to show you the results of that and how accurately these pairs work if you want to do day trading. And that is just a single pair, and that is just the results of last week. So I'm going to go through really quickly of those trades, because most of you, if you follow me from last couple of months, years, you know my basic rules of trading, you know the way I trade, and if you are my full MMTA course student, you know all the 6 rules of pullback entry. And if you are in my priority group, you know the basic rules of these trades. And if you follow me on YouTube, you know the way I take the trades. If the market is trading above 50 EMA, we take buy trade. If the market is trading below 50 EMA, we take sell trade. So this is the basic rule you need to stick with. Of course, I have some other objective rules which I can't explain in a single video. I have so many lessons for that, and it's not possible to explain every single thing. Now, with that, I'm also going to show you the trades we have taken in the priority group, the conditions, how we entered the trade in the priority group from the major area of values, and how we got an entry condition, and how you can enter your trades as accurate as possible using those zones with some objective rules. So all of that I'm going to give you in this video. So let's start with this pair, which is GBP USD. Now, if you are doing scalping, you need to make sure that your broker is offering a very tight spread, because when you do scalping, your stop loss is tight, and if your spread is really high, then your position will open above in gap, which will hinder your risk to reward ratio. So that is why it is really important, if you're choosing a broker, it has a tightest spread. I personally use IC Markets that has a very good spread, and Switch Markets that has an awesome spread as well, which is my second best broker. Links are in the description. IC Market also have a good spread if you are using commodities except natural gas. So make sure if you are scalping, your broker is offering you a very good spread. So few weeks ago, I have shown the 5-minute scalping on nat gas and gold. We're going to follow the exact same rules here on forex. If you know, I'm a forex trader, and all my strategies are valid if you are trading cryptos, stocks, or any other financial market. So let's start with the first entry we got here on Monday when the market opened right here. These 2 entries were last week's. So I'm going to show you the entries right here. Now, the basic rule you need to follow, if your market is trading below 50 EMA, you are only selling. So you need to stick with that rule and backtest if you want to. Now, once the market is trading below 50 EMA, you want to see if the market is trending nicely, making new lower lows. And once that happens, you see a pullback followed by a bearish engulfing pattern. So as you can see, the target was 1-to-1 risk to reward ratio. Your take profit is better than your stop loss. And in scalping, I sometimes go 1.5 to 1 risk to reward ratio and that, but initially you can set 1 to 1 and then move your take profit further to 1.5 to 1 risk to reward ratio like this. So right here, a very good example of a pullback entry, bearish engulfer below 50 EMA. We have objective rules that hit our take profit. And what do we have? Market is still making new lower lows, and then we had another bearish engulfing candle. So with that, as you can see, the price did push down 1.2 to 1 risk to reward ratio, and if you would have managed this, it will easily hit 1.5 to 1 risk to reward ratio. So another winning trade that happened last week. And if you move forward right here, exact same rule. What do we have after that? We have a bullish condition. Now, if you remember, the price is trading above 50 EMA, we only take buy trade. So right here, we have a bullish engulfer. All the rules are met. Again, if you're my MMTA student, it will make complete sense to you because you know all the 6 rules have been met here. Now, bullish engulfer that happened above 50 EMA. In that case, we have our take profit hit easily 1.2 to 1. That was your initial target, but if you would have gone 1.5 to 1, that would be your stop loss hit. But if you have just kept your fixed target 1.2 to 1 or even 1.3 to 1, it still hit your target. Let's move forward. Let me show you quickly a few more trades right here. I'm going to show you the results as well very shortly. So what do we have? Price is now trading above 50 EMA, and right here we have a bullish engulfing pattern. Price pushed up, and as you can see, initial target is 1.2 to 1, and if you would have managed it till 1.5 to 1, it still hit your take profit. So if you move ahead, now price has broken below 50 EMA, made a low, and now we had a pullback followed by a bullish engulfing pattern, and in that case, as you can see, the price did push down 1.5 to 1 risk to reward ratio. If you would have managed this trade, you can see the target has gone way below than your initial take profit. Now, that is not a valid condition. You know why? If you are learning my full course, if you are a priority member, you know the basic rules for that. Now, what do we have? We have a valid, it is not a valid condition as well, according to my rules. Now, we have a valid trade right here. Now we have a losing trade. All the rules are met. Bearish engulfer. In that case, the price pushed up, hitting our stop loss. But that is totally cool. Now you need to be disciplined. We had days where we had 3 trades, losing trades in a row, 4 losing trades in a row. But this is my tested strategy. I know for the long term, in the large sample size, at least 100 times, if you are testing, at least test for 100 trades. Only then you will see if that pair is performing well or not. Now a losing trade here. Let's move forward. It is not a valid condition, so we are not going to take this trade according to my rules. Now it is also a valid condition. I did not see that, but if I would have entered this trade, that is also your take profit hit easily, a valid trade as well. As you can see, the price pushed down nicely and stop loss wouldn't have been hit, so that would be a winning trade as well. So if you move ahead and see, we have price trading above 50 EMA followed by a bullish engulfing pattern. Price pushed up. Price is now pushing up, and we can see a nice trend, and price is now making new highs. With that, we have a pullback followed by a bullish engulfer, a winning trade. Then price is trending nicely towards the upside. Bullish engulfer, nice push up and hit our take profit. All the rules are met here. And then we have another winning trade right here. As you can see, the target is 1.2 to 1 risk to reward ratio. Here 1.2 to 1, it can even go 1.5 to 1 easily as well. Now price is trading below 50 EMA right here. Only sell trades. All the rules are met and take profit has been hit here as well. Now we have a losing trade right here. That is totally cool. But if you move ahead, we have the price trading above 50 EMA, bullish engulfing pattern, and nicely take profit hit of 1.5 to 1 risk to reward ratio. No entry condition. Patience is very important in this type of scenario. I'm not taking any trade. I do not want to be in a thrill all the time, because then you are just gambling, you are not trading. So we are not taking this trade. Now we had an opportunity of bullish engulfing pattern. We have a stop loss hit right here. Move ahead, we had a nice bearish engulfer, a nice take profit hit as well. Now price is trading above 50 EMA, nice bullish engulfer, take profit is hit as well. Now we are in the current date. If you see the results right here, just for 1 week, just with a single pair, all you need to have your tested rules, tested strategy, and good risk management. If you see how many winners we have, so total trades are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 trades in 1 week. How many losing trades do we have? 1, 2, 3. 3 losing trades out of 19 trades, and the targets were more than 1-to-1 risk to reward ratio, and you can see the potential of return on your investment. So that is how you need to follow the rules. You need to have your tested pairs, tested strategy, risk management. Now, if you're learning your own strategy, make sure you stick with that. Do not change your strategy. But if you want to learn my full trading system, where you learn all the strategies, pullback strategies, counter trading, consolidation strategies, and lots more, then I have my full MMTA course where you will learn all that. And if not, it's totally cool. Make sure you hit a subscribe button so that you can get free content like this every single week and analysis every single day. So that is what I want to show you, the power of entering with conditions and how nicely this pair reacted last week for me. Now in this part of the video, which is the second part of the video, I want to show you the zones I have sent to the members and how we entered the trade according to the zones, and with that we had an entry conditions, and that is I call a trade taken from the counter trading zone from the major area of values. So let me show you the first one here, which is Canada JPY. So you have just seen the trading results of the pullback entry, and this is one of the entry pattern we got here on 4-hour time frame. Exactly the same pattern my members and my students are learning, but they know all the rules. With that, we had a nice bearish condition right here, and as you can see how nicely the price hit my take profit of 100 pips. The initial target was 35 pips, but if you would have managed it, that is a nice take profit hit. Now I want to show you a very good example of the counter trading zone where we entered using those zones. I have already informed members to keep an eye on the zone. Once the price hit this zone, we are going to enter the trade. Let me show you that quickly. Right here. So I've already informed members that I'll be looking to enter my sell trade with the entry conditions once the price hit my counter trading zone, and we did not sell or buy until the price meets the area of value, meets the condition. The price was pushing up in a very nice uptrend. Now if you are a struggling trader, if you don't know the rules, what you'll do, you'll see the price is now overbought, right? What you're going to do, you're going to start selling and hope that price is now trading really high, it will definitely fall. No, it doesn't work like that. You sell here, then you say, okay, the price has pushed up further. Now you sell here, and then you say the price has pushed up further, and now you say, oh wow, we have a bearish signal, and then price again pushed up. But what the professional traders do, they wait for the price to hit their zones. They prepared a week before. Once the price hit the zone, what do you see? Once the price hit the zones, I informed my members, my priority members, I've told them that the price is now hit our zone, and now we are prepared to take our entry. And as you can see, I've sent the signal to the members, and with that we had a swing high engulfing pattern that happened in the area of value, and this is a good example of aggressive entry. My full course members are learning. If you are still in the basics and intermediate section, do not worry about this entry at this point. Just focus on your first 2 sections first. You will learn this in the advanced section. Now we had a nice condition, and as you can see, 106 pips take profit. Now in priority group, we had a very nice week. I sent 4 trades alerts, and out of that 3 winners and 1 loser, but that doesn't happen every single week. We had a losing streak as well in the priority group. All you need to see are conditions. Once you learn these type of condition, you can able to take the trades yourself rather than just relying on any sort of signals. All I want you guys to learn by seeing the patterns, pullback entries or aggressive entries, whatever I try to teach you in the priority group. So we had a winning trade right here. Now the last one I want to show you, NZD USD. Now this trade really tested my patience and was a pain in the ass as well, because now in trading, I know there are lots of factors involved, and if your trading psychology is strong, then trust me, no one can stop you to become profitable trader. Now in this case, we entered at this double bottom engulfing pattern. You know how I take my trades using this pattern. If you follow me from a couple of years, then we had a valid condition. We entered here exactly right here, and then price quickly start to falling down. Now in that case, you'll be fearful that price can hit your take stop loss, and what you're going to do if you are a struggling trader, you will just exit your trade. That is really bad. Once you hit your buy button, you are in that trade. That is a weird buy. So Once you hit that, you know your risk, you have calculated your risk, you know if the take stop loss is hit, you know that you are not gonna end up struggling at the end of the month. So that is why it is very important to enter your trade according to your risk appetite. Now the price was here. At this point you have a sign of relief, which is a green candle. Now the price starts to push up. At this point you are like, I'm in a profit. Now price can push up and hit your take profit. Now it didn't happen. As you can see, you quickly get a bearish candle right here. You are very scared and then you want the price push down back here. Now at this point the struggling trader will say, if the price now come back in profit, I will quickly exit my trade. That is how your emotions plays with you. But for me, if you are a professional trader, I know that once I enter the trade, it can either hit my stop loss or my take profit. But there are some times where I know that my trade has gone wrong. In that case, I exit my trade. But that involves lots of experience and years of experience. But I won't recommend you guys to do it. Once you click buy or sell button, wait till it hits your targets or stop loss if you have a tested strategy. Now the struggling trader will exit here, and then as you can see the result, the price did hit our take profit. This is the trade alert I've also sent to my priority members, and it ended up hitting our take profit. So that is how you need to control on your emotion, psychology, risk management. That is what I want to teach you every single week, and every single day I try to show you the conditions so that you can able to take your trade efficient as possible. So I hope you have learned something out of today's video. If yes, do not forget to hit a like button. For me, it really helps me in the YouTube algorithm. And if you are new, hit a subscribe button and join Money Markets family. So after this long lecture, let's start our analysis, starting with natural gas, gold, silver and crude oil. Starting with natural gas. So I want to give you a few conditions of taking an entry right at this big momentum candle. We had an impulsive move on Friday. As you can see, the price did push up, then hit the resistance zone and quickly fall back down. Now in this type of scenario, what I want to see, price is now trading above both EMAs. So if you have seen the first part of the videos, you know the rules. We are only entering buy trade. Now I have a different rules. If the price is at the counter trading zone and we have an above 50 EMA, in that case we still go short. But for that I have some objective rules which I can't explain in the video. Now at this point, just keep it simple. For me, if you are an aggressive trader, now what you can do from swing low to swing high, we have a Fibonacci tool. One way of entering in this type of condition, as the price formed at the area of value and a big momentum candle, one way is enter at 0.786 retracement. Right here in the blue, it is my 0.786 retracement. So one way is enter at the 0.78 retracement aggressively with a limit order. It can push up, target can be 180R. This is not a Fibonacci entry you normally see me taking, because for that I have a different rule. This is something, if you want to enter at the better price, I use 0.786 retracement. Now that is one way of entering that trade. Now other way of entering this type of trade is, as the price is trading above 50 and 20 EMA, what I will personally do, I want to wait for bullish engulfer that must close above 50 EMA. If I see that condition, I will take long, looking at the fact price has just made a new high. So if I see red candle followed by a bullish engulfing pattern, in that case I will enter my long trade. I'm not looking for any sell trades at this point. So once we have a condition, let's say if the price breaks above this wick, in that case I will still look for my buy trades followed by a bullish engulfer. Now I will only look for my sell trades from two areas. The area number one is if the price hit the upper level of the zone, which is 2.423, this zone goes down to 2.323. If we have a price, let's say, hit the upper level of the zone, then forms a bearish engulfer or forms a double top, in that case I will take my sell trade. Otherwise I will only look for buy trade from here, bullish engulfer, or if we have push up, pull back, a bullish engulfer. So buy from here, sell from here and sell. If we have a dramatic push down, let's say the market opened below in gap, or it just pushes down impulsively, break and close below this low, only then I will start looking for my sell opportunities. So no selling opportunities, and I'm not looking for sell trades at this point. As long as price is above 50 EMA, above this zone, we are only looking for buy condition. I've already explained that to you. So just look for buy condition. I'm bullish for natural gas, looking at the fact price has made a new high. So I hope that clears. If not, let me know in DM. Links, social links are in the description. Now here on currency.com, exactly the same. The price did pushed up impulsively and then closes back down. Now in this case, if we have a pullback of few red candles followed by a bullish engulfing candle, we will go long. So have these zones on your chart. Sell from here if you have a engulfers or a double top entry pattern. The zone above is 2.463, goes up to 2.517 zone from where we will enter sell trade if we get a condition. Otherwise, I'm just looking for a buy conditions. I hope it's all clear. Let's move on to gold. So gold is now moving sideways and trading below 50 EMA. Now at this point, I will personally wait for a breakout. If we have a breakout below this support line right here, if that happens, we have a confirmation of that price wants to push down and continue to push down until it hit 1959.22. That goes down to 1947.30, from where we will enter our buy trades using bullish engulfers or my double bottom entry pattern. So I'm bearish for gold, but for extra confirmation, if you want to wait for the break and close, once you have a close, we have an entry confirmation. Stop loss can be above right here. Take profit wherever you want to take it. So that is a condition of your sell trade. Let's say if you have a breakout above, in that case we have a bullish confirmation, and then price can likely to push up from here. So have this condition. For now, price is trading below 50 EMA. In that case, I'm bearish. I will only look for my sell trades. If you have a breakout, we can get a pullback, retest and fall from here. So keep looking for conditions and enter with conditions only. Similar as gold, price is now trading in between this box, and if we have a breakout below, it can likely fall to the lower level of the support area or in between this support area and can form bullish engulfers or my double bottom entry pattern. Pin bars is also one of my entry conditions. So this zone below is 20.02, goes up to 20.59, from where we will enter our buy trades, or if you have a breakout above, we can enter another buy followed by entry conditions. So finally, crude oil, nice push up out of my zone. Let me show you what I've said in my last video so that you can understand entries and conditions. Now on 4-hour time frame, we do have a nice swing low engulfing candle. Now this is also a bullish signal and expecting some push up from here, at least $0.8 to $1 push up. If you want to take this trade, you need to keep a stop loss below this rejection zone or below this wick and take profit wherever you want to take it. So what a nice take profit has been hit, mentioned in my last video. We had a swing low engulfer, stop loss can be below that, take profit at least 180 or at least 20 or 50 EMA. Now at this point, what to expect from here? Now as you can see, price is broken above 20 EMA. Now we have a good level of resistance, which is over 50 EMA. Now I'm expecting a hit of 50 EMA and a bearish engulfing candle. If we have that, we have a likely fall formation of a major double bottom pattern. If that happens, I'm going to take my sell trades. Now if we have no sell condition right here, and let's say price break and close above 50 EMA, in that case I want to see another green candle that must break and close above 50 EMA. If that happens, if we have a two green candle above 50 EMA, in that case I will look for my buy trades only until the price hit the next level of resistance that starts from 80.73, from where we will look for sell trades. So for now, wait and see what do we get at 50 EMA. Bearish engulfer, we're going to enter sell trade, break above, then we are going to look for buy trades only. So that is it for commodities, guys. If you have made it to the end and if you have watched the full video, then you are awesome. If not, you are still awesome. Any questions, any confusion, you can always DM me on Instagram. All my social links are in the description. These are the only links I personally use. Make sure if you get any sort of messages that claims to be me, make sure double check that in my YouTube description, because there are few accounts pretending to be me. So be careful with these type of scammers. Hope you trade green and have an awesome weekend. See you guys in the next video. Till then, take care.